Hello and welcome to week number 36. Having a quick look at the past few weeks at sort of trades we were looking at. One of them was EURUSD, was looking for it to about rebound. Starting middle of August, that rebound was kind of pushed back by a few days until it found the bottom and started moving up again. That rebound, just a quick reminder, came on the back of these yield differentials I've spotted on the German and the US. So that kind of found the bottom and eventually did push EURUSD up. Another one of the trades we were tracking for the last few months was EURNZD, and it was really dramatic the way it did it, but eventually did find a way lower. So back then we were analyzing, it was still about on a 70 handle. Now it's nearly 500 pips lower. I think it's got a little bit more to go, but it's fairly priced now in terms of where these two central banks are standing. Now one of the trades we are looking at was GBP-CHF on the long side. It was again really tricky to capture because of the way yields were moving. So the yields started a rally, fell off again, started a rally, fell off again. It's kind of still in that range. I'm holding my breath, not holding my breath on this one, because if you look at the US yields, which is a key driver for CHF pairs, it is starting to climb out of a steep decline, and I think it can push up higher. But there is a lot of ifs and buts hinge onto that for this to happening. So that means that CHF pairs will also struggle going forward. We have 3 central bank meetings next week. One is RBA, one is BOC, and one is ECB. The first one we have is the one from Australia. There are small expectations that they could be halting their tapering plans because of the Delta variant and all of that kind of stuff. That could be the case. I don't think they will do that, and therefore I think that around the RBA meeting, AUDJPY will push up towards 82.50 area in the short term, and the rest of a week it should trade based on where risk sentiment is. The next currency I'm looking at is the EURCAD. I'm not saying the EURCAD because I know that the ECB will have a meeting too, but the BOC will have their, the Bank of Canada will have their meeting before that. And I feel like Canadian dollar will start struggling. The economy is looking a bit in a tight spot. Employment last month wasn't that great. This month they're going to have another employment read on Friday. I think they will start slurring their words, and that should hurt the Canadian dollar. And I think EURCAD will start finding a couple of legs higher, maybe 100, 150 pips higher around on the Wednesday reads towards the end of the week. The last one we're looking at is EURUSD. Again, based on the central bank's meeting we're expecting here, it's not anything new expected from ECB, but the pattern that seems to play out is on the day itself it's very, very dodgy, but then you tend to see EURUSD just climb out of nowhere. There seems to be buyers coming in. There's a thinking in that the elections in Germany will favor a party that is more open to fiscal spending, and that could also play in the hand of EURUSD finding reclaiming the 119 and possibly 120 handle, somewhere close around that. I'll be very interested what happens around that line. I've marked it out because that was back then the June meeting from the no, it wasn't the June. It was around the fall from the June meeting from the Fed, where they started announcing tapering plans. So I feel like these retraces are healthy to start reloading shorts long-term EURUSD as it's heading down. But in the coming week, I believe we're still going to see another leg higher. One of the bigger trades, however, I'm tracking right now, I'm hoping I can nail this one in good time, is gold. I'm looking to short gold, not exactly sure where from yet. If you look at it technically, it's just had this clean high here, and it feels like shorting here against a $20 stop or so should work out. By my experiences, September markets love to take liquidity a bit higher before they start rolling over. So I'm going to keep an eye on that. If I can capture a short higher up, I will. If not, I will need to wait for the momentum to really catch up towards November actually. So I might not get that trade in, but long term expect gold to come down. Why? Because the interest rates in the United States eventually will be rising. The short term yields in the United States are looking quite positive. If I were to compare this with one of the charts that I track quite a lot, which is the Fed Funds futures, for instance, for December, it is right now on a retracement path, but there's so much you can go higher. There's not a lot left. Eventually gold will come down with it, and that should be quite a juicy trade to have. That's all I wanted to cover this week. Next week, again, a lot of volatility going. It's better probably playing these things around or after the events are due, just to get a bit more clarity. But there's definitely volatility, and make sure you get some trades in next week, because the following week you find volatility dies down again. That's a sort of the pattern we see. The first 2 weeks coming out of the summer period is quite punchy, high volatility, good movements, and everything falls back down into a drop, and it gets really annoying trying to trade the bigger swings. So if you can get a couple of trades in next week, if not, then you're going to be probably sitting on hold for another 3 or 4 weeks until things pick up again towards October. Thanks again, wishing you all a profitable week, and I'll catch you all next week.